I think because they're expecting a fairly dovish message today. I think a 25 basis point hike is quite likely, but we think the tone of the meeting will be, on more of the dovish side, particularly when you compare it to yesterday's Fed meeting. I mean, there are three things we'll be looking for: would be how they characterize the consumer. There's been some slightly softer data, and our estimate is that Q2 is now in negative territory, but we've had more funding from the Chancellor. So how do those offset each other? Is that net positive or negative on the consumer? There's the vote split. We think there's a three-way split coming with 162, 1 for hold, 6 for 25 bips, and 2 for a 50 basis point move. And then we think there's a chance that the forward guidance will be amended at this meeting.
The markets have been frustrated, I think, over the last couple of meetings. They've felt that somehow the communication hasn't necessarily matched up with the voting patterns. Do you think we're going to get a purer delivery on the message today?
No, I think it'll be quite tricky. So we see this three-way split with a rate hike, and I think, there'll be a sort of fairly fractured committee. They've been talking about being on a narrow path. And when you're on a narrow path, sometimes some people fall one side and some people fall the other, and we're expecting that to happen with MPC members at this meeting. So we think at least one might be voting for hold. That's quite likely to be Cunliffe, who we believed was one of the members who preferred to remove the forward guidance at the May meeting. We think at least two, potentially Michael Saunders and Catherine Mann, are still in the market for a 50 basis point hike. So I think, with some voting for a large hike and some voting on hold, I think that will be a slightly difficult message for the market to swallow.
And I'm just telling the viewers that we're offsetting your shot with a shot of Kiev, where we can see President Macron, we believe the Prime Minister Draghi and Chancellor Scholz are with him. They've arrived in Kiev on the overnight train as well, taking questions from journalists as well. But moving back to the UK, Steffan, you've worked with government. In fact, you've worked all over the place. Federal Reserve, of course, at the height of the last crisis. But you've also worked, I think it was for Philip Hammond. In 2017, you were working for the Chancellor as well, so you know a thing or two about the politicians. I listened to Boris Johnson yesterday in Prime Minister's Question Time. Is he in cloud cuckoo land about the ramifications of this cost of living crisis on the UK economy? He seemed to think that everything was awesome.
Well, my main takeaway from the recent communication from Number 10 and from the Prime Minister, and the succession of cost of living packages that have been announced, is that actually more government support is likely in the future if cost of living pressures do not fade, and potentially in the coming weeks before the summer recess we could get some more fiscal announcement in order to support households both at the lower end of the income distribution and more generally across the population.
OK, but can we afford that in the United Kingdom? If we have inflation surging and we have potentially gilts going up, can Rishi Sunak afford to open his bag and offer more support to those at the lower end of the spectrum, or to anyone for that matter?
Simple answer, yes. Back in the spring statement, the OBR estimated there was about 30 billion of headroom relative to the two main fiscal rules. They spent 15 billion of that in the recent package, but 5 billion of it was funded from the windfall tax. So that gives them, 20 billion left to spend and still be safely within their fiscal rules. So yeah, there is still some money out there that they can spend if they want to.
Steffan, how has that happened? There's been a lot of research out there from various think tanks that have said actually the UK is potentially facing a huge increase in its bill to finance itself going forward as well. Will they misplace those concerns, that pessimism?
No, I mean, there's just a lot of things moving the public sector finances around. And one thing that is helpful to the Chancellor is they've frozen the tax thresholds. And as you were talking about earlier, we're having very high inflation. And when you have high inflation and high wage growth, that pushes people through the tax thresholds and brings in more revenue to the Treasury. So that offsets the higher financing cost that is also, weighing down on the public sector finances.